Good day, everyone. I trust everyone is having a great Sunday. We are going to look at the coming week, the pairs for the next coming week, on what I think will happen on the market. I'm breaking down the market of the forex pair. Here I have Euro USD. So my strategy. This is the first video I'm posting of the market breakdown. So I'll introduce my strategy and the other coming videos. So I won't have to explain much. So every Sunday I'm posting a video of market breakdown. So on my strategy, I use the top-down, bottom-up strategy, which is analyzing the market from the higher time frame to the smaller time frame. Let's start off on the monthly. This thing has been sweating. This thing has been bearish for quite some time. Euro USD. Let me place it. I start off with my rectangles, which is my supply and demand, resistance and support. I count firstly 5 months back. This is the current month, which is July. 1 2 3 4 5. That's where I plot my first high. So you get the sometimes you get a low. Here I got the supply. Sometimes I get a low, which is the demand. And if you get the supply first, then you find the demand. If you get the demand, then you find the supply. So now I got the supply, I'm looking for the demand. So a potential demand zone is on on this consolidation there. That's it. So from the monthly, I'm going on to the weekly chart. Let's see the weekly chart, what it has for us. Okay, so on the weekly chart, I plot the previous 5 weeks back. I plot the horizontal line on the previous 5 weeks back. So it's weekend today, it's a Sunday. So this candle of the previous week is going to close, and it's closed, and we're going to hope to have a new week next week. So we count from this one 1 2 3 4 5 at that doji candle or pin bar, whatever you call it, and then you place it there. From here, as you can see, even right now the market broke the previous demand zone. It broke the previous demand zone and made it a supply. So let's go from here, we go to the daily chart. From here we go to the daily chart. On the daily chart, we do the same thing. We count 5 days back. So plot the horizontal line, count 5 days back. This day is already closed, which was the candlestick from Friday. So we start with it 1 2 3 4 2 4 5. This is the candle, and then we plot it right up there. So these horizontal lines, what they do, when the market breaks out of this horizontal line at $1.01682 region, it confirms a change of direction. It's no longer a downtrend, it is going to be an uptrend. But for quite some months or weeks now, weeks and months, the Euro USD pair has been on a downtrend, quite a long downtrend. On my perspective, I'm looking for potential reversals to the highs before we can take a long sell. Let me go to the 4-hour. So as on the 4-hour, I'm looking at, there's a bullish candles. Back to the daily. On the daily, what I do, I take the Fibonacci retracement and plot it to see where the possible targets of what possible changes of the market can appear. So I could put that there at the high and bring this one low. Okay, I have this. Yeah, this is good. So chances here are that the market is on a downtrend, guys. The market is on a downtrend. It has been on a downtrend for quite some time. The market has been on a downtrend for quite some time. You can see trying to make a rally and then failed, went down. The market tried to make a rally and then failed, went down, even lower, breaking that low. The market tried to make a rally and then it failed. So here I'm looking for a potential pullback from this low to probably 100%, probably 200%, so 200%, and probably also to 50% to 50% and 200%. So we have two chances. The first chance, we can take it around this zone, the 50% zone, targeting to go to the downside. And then the second chance, you can take it from the 100% zone, Fibonacci retracement zone. So chances are we first take the sells here when the market pulls back to this 50% zone, and we look to go further down. If it fails and wants to even go high and test the $1.05138 region, we will sell even from there. And then if it fails and break the demand, the supply zone, and make it a demand, the market is it's definitely changing direction. Can have an impulse and a retest, impulse, pullback, continuation. So that's what I think on the Euro USD. Let me jump onto another pair. The pound dollar. Same procedure, guys. We start the market to analyze the market from the monthly time frame to the smaller time frames, which is the top down, bottom up strategy that I use. So I've actually identified the previous 5 months. One, two, three, four, five. That's a supply zone. Some call it a resistance, whatever. As long as you understand the terms. And then now I'm plotting the demand zone. So potential demand is this zone right here. This zone right here is a potential demand. In order to see that the a zone is potential, or it carries much weight, that you can call it a zone, it should be tested by multiple candles, not only one candle. So this is a monthly candle, so you can imagine on the daily and on the 4 hour what happened to this zone. Let's go on to the daily and see what happened on that zone. So as you can see, the market respected this zone multiple times. It came and broke and retested it, created a head, first shoulder, second shoulder, and plummeted down. Impulse then corrected and went further down. So from the monthly, we go back to the weekly. We go to the weekly from the monthly. On the weekly, we plot the previous 5 weeks horizontal line. So we have this closed candle, 1, 2, 3, 4, 5. That's where we plot our high, our horizontal line. That's right. And then we go to the daily. The pound has been on a negative decline. Pound has been on a long downtrend for quite some time. And then on the daily, we plot the horizontal line on the previous 5 days. 1, 2, 3, 4, 5. Okay. There. Then we come to the Fibonacci retracement. I take it from the high. Let me use this high. And then I'll use this low that closed on that day, the previous day, which is Thursday. Okay. So on the pound, I'm looking for more sells. I'm looking for a downtrend continuation to the downside. So I'm anticipating that the market would rise to 50%. If you spend some time on the forex market and know about the dollar index, you would know that the currency, the code currency is dollar. They are more similar. You understand? They are similar. So you get euro versus USD, you get pound versus USD, and then you get USD versus JPY, you get USD versus Canadian dollar. When the dollar index rises, as in impulses to the upside, or it's positive, the euro USD, pound USD pairs will decline, will go down. That's a pair correlation. Okay, right now I'm anticipating, because the pound have tapped on the 0%. From the 0% on my strategy, that's where I buy. And on the 50%, from here I buy. From the 0% I buy, and I target the 50% because it's on a downtrend. It's been on a long downtrend. So let me plot this. Let me go to the 4 hour. a smaller time frame, the 4-hour. So on the 4-hour, I'll plot a better resistance, a short-term resistance, because the resistance or the supply on the 1-hour is not similar to the one on the daily chart or even on the weekly or monthly. So there's a potential resistance. So what I'm anticipating a further drop to the downside. I'm anticipating a further drop. So for now, we could see price rise and then test this zone. The zone at $1.19282 region. Also, I think it could also test this 50% zone, or the area at between $1.266 region. That's where I think also it could test, the market could test, and then that's where we'll take our sales from there. What am I doing? Okay, let me close this. Okay, this is what I anticipate the market will impulse to the upside, and then what we are waiting for is potential sales from the zone at $1.20107 region, targeting the lows at the 0% dollar region. That's what I'm anticipating for the coming week. Let me jump to the next pair. I'm using the broker Globex Oyenda. I'm using the broker Oyenda. So that's a good broker. It have been operating for quite some time, more than 10 years. So on the dollar USD JPY pair, we start off on the monthly time frame. This one has been dominant. The dollar has been dominant, and for the past weeks, the past week I had a bit of a losing trade, but the previous weeks I had the winning streak. And then the dollar pair, I saw the dollar pair have been dominating, and then this week, the 2 weeks that's coming, the next 2 weeks, will have an economic event, that is the federal interest rates decision. But for me, I trade fundamentals, and I use a strategy that I make money within seconds. I basically risk what I afford to lose. There's a video on the channel that I posted how to trade the AUD interest rates decision. 1, 2, 3, 4, 5, and then on that video you see here, I'm getting the low. Now I'll be looking for the high. I'm getting this demand, I'll be looking for the supply. On that video I took 80 rands and made a profit of plus 450 rands within less than a minute. That's what's up. So this is the potential supply, potential resistance. So from the monthly, as you can see, the market have already broke that area right there. The market broke the area here, impulse from that low, and then it consolidated, and then it broke the area, the high there at the zone at $131.073 region, and from there it impulsed to where it's currently at $138.523 region. So let me clear this. So I'm anticipating a reversal on the dollar. I just don't know when it will come, but I'll trade what I'm seeing and follow the news. So on this one, the weekly, we plot previous 5 weeks. This week is closed 1, 2, 3, 4, 5. From the weekly I go to the daily, and then plot the horizontal. We have that current day closed as a bearish candle. 1, 2, 3, 4, 5. Yep, that's the 5th candle. So what I'm anticipating is a potential decline, pull back, and then impulse to the upside. So let me put on the Fibonacci retracement. I'll take that high there. I'll use that high as my potential 100% zone that was broken out. Okay, so right here on the daily chart, the market, the dollar, US dollar, USD JPY impulse to the upside, and chances are it will come back to test the 100% before it goes up. Let me go to the 4-hour. Let me plot a smaller time supply. A demand turned into supply. A supply zone turned into demand on a smaller time frame. So this is a potential demand zone. Some of you know it as a support zone. So with what I'm currently seeing, I'm anticipating price to pull back from the high, as it have already broken out of this consolidation there. It broke out of the zone at $138.55.588 region. So the Do theory says when price breaks the previous low, it's a change of direction. So with what I'm seeing here, price broke that low, and it have changed the direction. Now we're targeting $137.370 region. So from there, that's where we can take potential buys. And then sometimes it's possible that the market can also go further down to this zone. So I always have two chances for myself. I cannot always be accurate. The market can go from there, and then I can expect to buy from this zone. I expect to buy from the first zone here. The first zone, I'm anticipating the market to decline, and I'll buy here. If it fails, the buy fails, I can take another buying opportunities here. So let me know on the comment section of what you anticipate for the next coming weeks. So this is Worldwide Forex signing out. I hope you have a great, productive weekend, and stay focused, keep learning, make proper research, and use proper risk management. Let's get it.